Thanks for having me on. Great to meet everyone. Yeah, Josh Richman. I, with Symphony Risk, I've been working within kind of with the search fund, with private equity firms, in the ETA community for call it 12, 13 years, advising on insurance benefits and other kind of transactional, insurance issues. So. I have stuff that's kind of more focused on for searchers that are, insurance diligence kind of 101 and things to kind of, watch out for. I'm kind of,
Yeah, that works.
which,
Is it the same one that you did at Sam Rosati's thing?
yeah,
Okay, yeah, let's go for it. That's a good one.
I can
Because
kind
I
of,
learned
yeah, I
some
can.
stuff that I didn't know.
All right, cool. I can kind of, and then we can kind of just open it up.
Yeah. And like we always
Cool.
say, please jump in and ask questions if you hear something that's interesting.
Yeah, please, please do. Um, Good stuff, good stuff. So, anybody follow Flat Roof Freddy, the roofing guy?
I guess no. Is he on
Anybody?
here?
Is he here? Is he here?
No, he's not
Um,
here.
so this is actually something that I did more for SM Bash as kind of a joke because we all knew each other from Twitter. So this is just kind of made up. But the next story I'm going to show you is all true, and this was a self-funded searcher that acquired a roofing company in Southern Florida. Um, this business that they I like to kind of just start off with the story, just to kind of get wrap your head around it. But they acquired a roofing business in Southern Florida, and the business was doing roughly $10 million in sales. $7 million was just kind of traditional, repair work for commercial buildings, and then $3 million of that was really residential new construction. The thing that was really interesting with the new construction is that all that work was really the roofer was acting as a subcontractor under a larger general contractor. And this general contractor had a very unique kind of program, which is called a wrap-up insurance program, and that really effectively wraps up the entire project. So not just the roofers, but also the painters, scaffolding, plumbers, all under their wrap up insurance program. And that way, the individual subcontractors don't need to buy their own insurance. And there's a bunch of reasons why a general contractor would wants to do that. But the important thing for you guys to really note is that because the general contractor has this unique program, um, they didn't have to buy their own insurance for that $3 million of new construction revenue. So when we're kind of looking at the doing diligence, looking at the policies, we're like, wait a second, why are you paying for new construction insurance costs when you're already kind of getting covered by it? Your insurance premium is 40% higher. Residential new construction has a higher rate than your traditional kind of commercial repair work. The other thing that was really interesting about this was that, in I think it was like early 2020, the company really transitioned their labor force from W-2 to 1099, kind of contractors. Um, there were no subcontractors agreements in place, nor was the seller really collecting the certificates of insurance that the workers had their own, insurance costs. But the seller was kind of like, listen, they have their own insurance. We aren't doing the actual kind of roofing, work. However, kind of looking at even like some of the claims, like, wait a second, why, in a sense, if subcontractors have their own, you don't have any employees, why are there claims? It was really simple. The subcontractors weren't carrying their own insurance. So if they're not carrying their own insurance, they don't have subcontractor agreements, you're not collecting COIs, it's going to hit your insurance. So really the whole point of this, and I like to kind of open up with this sometimes with a presentation, is that uh, insurance is for at least acquisition entrepreneurs, for searchers, is really outside their wheelhouse. Most people um, don't have experience with it pre-close, and then all of a sudden they find themselves running an HVAC company. They're working with GCs. They're in insurance. Is it can be the second or third largest expense outside of payroll. It's something that you probably don't really understand, but there's also opportunities to improve upon it, whether that's from a premium perspective or whether it's from kind of an overall kind of risk kind of perspective. So and these types of stories, I mean, this is one that happened, but this type of stuff comes up all the time, especially as a lot of searchers and those in the ETA community want to really go after those kind of trades businesses, modernize those businesses, and they just kind of get into it and they're like, holy shit, like I don't really understand what is going on here. So um, so I kind of Andy's not on the call today, but yeah, so as I said, I've been doing this for 13, 14 years, kind of somewhat by accident. I was doing more middle market advisory work within the insurance space. And years ago, a lot of the original investors within kind of search and ETA were associates and VPs at investment firms, but they're investing into their friends' kind of search fund out of their personal checkbook. And so I just saw the early growth of it. Some of those earlier deals were very successful. Those searchers went out, raised their own fund. More universities started to teach it. Our generation wanted to be more entrepreneurial, and just fast forward, it's been awesome to see. Um, the other thing I like to get people familiar with is the, just understand an insurance. And what I mean by that is a low risk business. Well, let's just say could be some of the white collar, bookkeeping, accountant, some of even those in kind of technology. Um, Insurance is going to be probably a least expensive line item, honestly. You're going to have tons of options in the marketplace. You're going to get greater coverages and endorsements and enhancements to your policy, and you're going to get all that, and you're going to pay lower premium. On the other flip of the side is for what could be HVAC, traffic control, painting, whatever, high risk business. The market really starts to skinny down in terms of who's going to be able to provide, options. You're not going to be able to just kind of go online and rate something up. You're going to have to fill out, applications. You're going to have to provide loss runs. They want to see that you have subcontractor agreements. Um, and you're going to pay a higher premium, and you're going to have really less coverage. Honestly, you could have residential exclusions on the policy, New York City work exclusions. There's the devil's in the details, right? There's a whole host of things that are in there that are just waiting to bite your ass, and that's the truth. So really, focus really, to really people want to manage costs, focus on identifying it, mitigating it, using different kind of contracts to transition it out. You really to keep premiums down. Um, I, I did this for SM Bash because they wanted me to kind of set the stage for later on. I don't. Would this be helpful for just understanding the
Yeah,
different?
yeah. Let's go for it.
Go for it. Okay, cool. All right, so I'll try to just run through this quickly,
Yeah.
but there are really five policies I'd say that all companies need. You've got property, general liability, workers' comp, business auto, and umbrella. General liability is really your classic slip and fall. Somebody comes on your premises and slips and falls. Um, you've got your more completed operations work. So any of your service or repair work that is done, extremely important. Products liability. I mentioned this, the McDonald's hot coffee lawsuit, but any of your products that are out there, this all hits the general liability. And then you have personal and advertising injury. That could be false arrest. That could be, copyright infringement. You used a photograph didn't realize it was copywritten, and that that person sues you. That all hits the general liability policy. Typically, this policy has $1 million occurrence, and then they each have their own kind of aggregate. Um, you've got property. You've got really building coverage. You have contents, so your inventory, everything that's inside the building. And then if you have a loss to the building or the contents, you have what's called business income that will pay you the net income that you would have earned during the kind of the period of restoration, plus continuing operating expenses. So that could be your payroll while your building was down. It could be your debt service, while you were kind of restoring operations. So really important, especially if you're um, doing a lot of work at your warehouse, that number is accurate. Important to note within kind of the SMB world and ETA world, a lot of times sellers will own the building of the asset you're acquiring. Um, and who's responsible for building coverage post close uh, is really important, especially if you're in Florida. I'm in California. California, property insurance is through the roof. Texas, coastal regions. Um, I'm working on a deal now that is it in Texas. The property to insure it was the building coverage was almost $80,000, and the seller's like, hell with it. I'd rather just rebuild it. He doesn't insure it, but now the independent sponsor that's coming in to acquire it, they're gonna have a lease agreement, and guess what? They want them to have building coverage. So you gotta understand that, and I always see that kind of come up, especially within the really the call it the SMB acquisitions. Workers' comp, you probably have all heard of it, but it's really so an employee can't sue you. It's required in all it's required in all 50 states. In Texas, you can technically what's considered opt out of workers' comp or non-subscribe. What that means is that the employee actually will have to go to court and sue you for a work-related injury. But you should always get workers' comp. You guys probably know business auto. For vehicles you own, the important coverage also is what's called hired and non-owned auto. If your employee uses their personal vehicle for business purposes, or if so let's just say they're picking up pizza for a team lunch, they get into an accident, that would be hired and non-owned auto. And then if the employee rents a car, there's coverage in place. Um, that coverage is excess any of their if the employee has any personal insurance on their own. And then lastly, umbrella. The important thing to note about umbrella, which most people don't realize, it has a terrible name. It only covers really your general liability. So if you have a large, general liability, a products liability claim, a large auto claim above $1 million, um, that's where the umbrella will provide the additional limits. It doesn't cover property. It doesn't cover earthquake. It doesn't cover a sexual harassment claim. It doesn't cover anything really except for your general liability auto and technically really like workers' comp. So really important because everybody always asks me, "Oh, I've got an umbrella. I'm fine." It only covers that. Another question I get is, "What's the right limit?" And it is a lot of times it's going to be dictated by one of your customer or client contracts what to carry. Um, Sometimes it's just we provide benchmarking and everybody has different risk tolerance. It's almost what's your favorite color decision of in terms of what limit. Um, a lot of times your lender will require all those policies to be in place. And then you've got kind of get into more specialty policies. You've got management liability, which is director and officers coverage. That's more if you have a board of directors. Employment practices, wrongful termination, discrimination, Me Too, um, you know, fire Josh because he's got an afro, whatever it is. Um, Other things, I think that everybody should carry cyber. I see a lot of cyber claims. It's really inexpensive, but I'd see probably at least 2 cyber claims a month. With my clients. Um, Nothing major, but there are claims between, $15 and $30,000, funds transfer fraud. They paid a fraudulent, type of, invoice. Everybody should, for most businesses, they're between $1,000 and $2,000. Um, and they provide just a lot of coverage. And then depending on the type of business, you may have contractors pollution, you may have a specific, like accountants errors and admissions policy. Um, you may have type of product recall. It just depends. These are all kind of very specific terms your business. Let me stop there. Anybody have questions or cool? Um, a lot of times, excuse me. Um, a lot of times people are like, hey, here's a stack of insurance policies. Can you kind of let us know what's going on. Real insurance kind of diligence is really mirrors your typical business diligence that you're gonna, kind of perform. Whether that's, from an operational side, where we're reviewing the balance sheet, looking at the property limits, how you're accounting for the business income of insurance. It's not the same as regular business income. How they accounting for kind of, kind of capex and loss control for legal. We're reviewing all your contracts, the indemnification, making sure you're compliance, looking at the subcontractor agreements in place, uh, quality of earnings. Um, your the Q of E advisors. We're kind of going deeper on the insurance side, whereas hey, general liability, workers' comp, those are all subject to audit. What did the seller put down? Are they going to expect an audit? At close? Not 2 months after policy expiration, so you have a sense of what the actual true premiums are. Really important if it's blue collar businesses where you're bidding on business. A lot of times sellers, they don't know what they're gonna win for the year. Sometimes it's you know, hey, I know we're gonna have this audit, but I'd rather have insurance coverage and just accrue for it over the course of the year. So at least you know. You've got, environmental, regulatory, intellectual property. This is more specific, but we're looking at the environmental, your product recall policy, for patent trolls. And then, for some businesses, there's, reps and warranty insurance, and that kind of ties back into uh, the purchase and sale agreement in place. Um, so let me Um, so our typical, I guess, where do we get engaged? We typically either get engaged right when somebody's under LOI, or we come in really post-acquisition and and we do a full, really insurance audit, insurance report, of the existing program. I could pull one up a little bit after, but we're looking at, hey, any material coverage gaps. It's going to have impact on, valuation, with a potential audit. Um, Giving you a sense of, hey, what are the projected. Um, you've got, kind of claims analysis and XMOD forecasting. I'll get into that in a second. And then, your contractual, review. I think it's also important. A lot of times, I think, as I mentioned earlier, it's probably outside your operating wheelhouse. So just giving you a sense of insurance 101, 102 for the acquired business. Um, Here's just a couple of things over the past, call it year or so, we've seen on deals. A searcher was, looking to acquire it was a trailer business. The company did not purchase any. They purchased a general liability policy, but it was only for premises. They had products and completed operations excluded. So they had all these trailers that they're making on the road. There was absolutely no coverage in place whatsoever. The lender was obviously requiring it. The searcher's taken out an SBA loan to acquire the business. They're not going to, kind of have all these out there. So, it ended up being a delta that of $40,000, but the searcher was able to kind of go back to the seller like, look, this is standard. You should typically have that. Um, this next one over here, for policy exclusions, this is a searcher that acquired a fire. I'm blanking on the term right now. Eh, Fire suppression. There we go. Fire suppression business. Um, and they actually were performing work and doing fire suppression at aircraft hangars. But they're reading through their policies, there's an absolute aircraft hangar exclusion. So if there's any claim that occurred whatsoever at that job site, there's no coverage. And that was, call it 5% of their revenue. Is it material? Yeah, I think it is, but at least you guys at least they know going into it, and it's stuff that can be brought up. Um, here's a sense of, this is, it was a roll up for barbershops. The exposure they were saying was only $3 million. The company was doing, closer to $9 million. That's going to be an adjustment to the audit, and it's exactly kind of from the policy what it looks like. Audit frequency, annual, what they're paying. This rate is per $1,000 of
Nope.
sales. For here's call it here's a plumber, rating classification. In some states, a high wage plumber, those above, call it, getting paid $40 or $50 an hour, will have a lower insurance rate than somebody that's, getting paid $20 an hour. Why? Because it's been statistically proven that those that are higher paid, that are better qualified, have less claims. So as you're kind of looking at, the company, are they classified correctly within the general liability policy? A lot of insurance brokers, don't know that. But all things that we're kind of looking for as reviewing policies. Um,
Hmm.
so here's kind of just this is a HVAC, kind of contractor, but, as we're kind of going through it, line by line, for somebody that's under LOI, policy was based off of 1.2 million, but the census data, we're going to have 1.4. So you're going to have a $6,000, kind of adjustment. Um, looking through, their umbrella, the umbrella of one of their contracts required, $5 million, but they only carried three. It's going to cost a couple $1,000s to bring it up into compliance. So these are just all things we're trying to point out, for the searcher to be, kind of educated pre-close, and things that you can potentially either negotiate back with the seller or just something to be aware of as you make that transition. Um, let me. One important thing that I kind of want people to note, especially if you're looking to acquire a business, unlike in your personal auto gets renewed, call it every 6 months. Um, Commercial insurance, the losses on the current policies aren't really factored into current premium. Um, before I got on this call, I was walking through a searcher that was buying a painting business. There's a $700,000 workers' comp claim, of a guy that fell off a ladder. Um, that happened and it hasn't been run through. The insurance knows about it, but it hasn't really run through the go forward workers' comp premium. So I always tell searchers, ask for the currently valued loss runs, get a sense of, hey, what are the current claims? Could that result in any material increase going forward? There's something within the workers' comp policy called the XMOD. It's the experience modification factor. Basically, hey, one average is your average, it's your C student. If you have um, better claims than your peers, you start going below 1 point, 0.9, 0.8, 0.7. That means you're 10, 20, 30% better than your industry peers. And your industry is defined as the same state and the same classification of worker. So you could be that 10, 20, 30% means you get a 10, 20, 30% discount on your workers' comp relative to your peers. If you have poor claims, 1.2, 1.5, you're 20, 50% worse than your peers, and you're paying 20 to 50% more in workers' comp compared to your peers. Um, for those that have major contracts, whether it could be governmental, it could be, a large telecommunications company, they may require you to have your experience modification factor below a 1.1, below a 1.2 in order to maintain a contract, or even if you want to win new business. Every year it's very common, comes to me and they want me to kind of certify what the XMOD is so they can submit it terms of bid. Again, why is it important? Obviously, if you're buying a business, you want to know what that XMOD is. A question I always typically get is, well, um, you know, this is a new business. It's an asset purchase. The XMOD 95% of the time will transition over to the new entity. Years ago, there used to be kind of XMOD washing where, sellers would, companies would have poor XMOD. They set up a new entity and try to get it reset. They've really cracked down on that and made it pretty difficult. So
Even if it's an asset sale
yeah,
and new owners, even
it
new
will. Yeah,
owners asset sale, it
it's
will still follow you.
it will follow you. Yeah,
How
95% of the time
how does it?
because it's the same operating business. It's the same employees. It's the same company essentially. You
Okay.
know, you can go and you can tell them, hey, you know, a new ownership, want to create a culture of safety, and maybe they can provide, whether credits or debits to kind of offset premium, but 95% of the time it will transition over.
Interesting. Okay.
Yeah. And there's ways. I mean, honestly, I think I'm being recorded. Hopefully that doesn't go not too far, but you can try to hide in like a PEO or some other area for workers' comp for a couple years and try to come out. Like,
Makes sense.
you can do that. Um,
Makes
eh,
sense.
but yeah.
But I do think that the X mod is also a way to see the quality of the business that you're buying, in terms of management, in terms of like culture, in terms of all these things. If it's a below one, that's a higher quality business, then you know what you're going into. It's above one, then you know what you're going into. As long as you know and what you need to fix, then it's good awareness to have that.
Yeah,
Have
I
that
totally
information. Yeah.
I totally agree because honestly, at a minimum, you'll get a sense of, hey, what do the employees think of this company? Are they actually legit claims? 'Cause if they're remember, insurance is there for severity-driven claims, like that example I just told you about with the guy kind of falling off, a ladder. That's why you buy insurance, right?
Yeah.
For severity. You don't buy it because somebody has a pulled back or all these little things that can jump up. Um, and the way the X1 is really calculated, it can handle severity. It's the frequency claims.
Hmm.
Other thing that it kind of gives you is, hey, how do employees feel about the company? How they feel about management? Are they using workers' comp as a because they don't have health insurance? Um, so there's something that's called it's like the Monday morning claim. Employee injures himself over the weekend, but doesn't get reported until Monday, right?
Hmm. Interesting. Yeah.
But I think it's just for anybody that's acquiring a business. It's important to look at, and the question as I think I said it earlier is I always get, how do we lower premium? How do we lower? I mean, this is a direct correlate how you lower premium. Your X mod. It's written right there the way that it's kind of calculated. After really 0.75 or so, it, it really gets hard to get lower than that. And sometimes I think that if it's too low, eh, there's probably something wrong in a sense of that they're not reporting claims. The business is paying it out of pocket. There's probably something else there if it's, a fencing contractor and there's no claims over the past 10 years. Like, give me a break. you know. But it's important for you because especially if you're buying that business, are you assuming that, liability? Are you going to pick up that aspect that what the seller was previously doing? Just things to know. So I always get kind of wary if it's you know, too low
Cool.
for an HVAC for kind of trade business as well. Um, what do we got here? What do we got here? Other things. You kind of just risk control. Run MVRs also, motor vehicle reports. Can your employees actually are they insurable? Are certain drivers causing your insurance premium to go up, $6,000? That was just the case on Friday for one of my it was a roofing business in Texas. One driver was causing it to go up that much. It's like, what? We're gonna try to refigure out where he can, be useful. Not paying that much, kind of for him. Implement telematics, update. I find most companies have very weak subcontractor agreements. Again, push that risk away from you. Um, I mentioned,
What are some of those terms in the subcontractor terms that you like to see that will lower the premiums or transfer the risk?
yeah, whether it's being named as additional insured, waiver of subrogation. Sometimes it's, certain minimum limits of coverage. There's I'm happy to review and kind of comment and send you a whole, I should add that, a whole list of things that, hey, this is what we like to typically see in a subcontractor agreement.
Okay.
Um, Cybersecurity. One of the really cool stuff that's kind of going on now, at least in the insure tech side, on the commercial side, is that they can run a cyber scan. I can run a cyber scan, kind of for your networks pretty quickly. And it will come back and it will say, hey, the insurance company's going to say, hey, this looks great. We want to write it. Everything's kind of up to date. They'll come back and say, hey, you know what? You got to update your Java. Got to fix these couple patches. We're good. And then we'll write it, for X amount of premium. Or they'll say, like, look, this is a mess. There were some leaked email addresses. We don't want to touch it. And that's how they're rating. That's how they're kind of rating cyber insurance, these days. Um, you know, Again, I think that's most such an important coverage that it should be almost like, the six policies all companies should have. Um, this slide is more really for those that are looking to acquire a company, but it's understanding the kind of the purchase and sale agreement. Are you assuming the policies? Kind of disclosure schedule related to the insurance policies. Some policies have a change of control trigger that can be assigned to the new entity at closing. Some can't. It's important to understand, kind of our watch and their watch in a sense of, hey, there was a sexual harassment claim that happened, on July 1st, 2024. But then all of a sudden, you don't acquire the business until, November. Who's going to be responsible for kind of for a claim at that point once you're the new owner? The insurance will kind of come in and help dictate that. Um, so again, I think we kind of review all their
Is it the same
contracts.
as the runoff tail?
So the runoff would come and kick. It separates really buyer and seller. So anything
Okay.
that happened under the seller, um, really watch a previous owner.
Got
So if there was a sexual harassment claim when they were CEO, but then it wasn't reported until years this new CEO, insurance can kind of help dictate that,
got it.
and kind of push the liability onto uh, his policies. I think we kind of spoke about you kind of reviewing all your kind of material customer contracts, and then what would be I have yeah, and these are just I can shoot over some material, but these are things that at a bare minimum, whether you're in really diligence or whether you just want to review your current kind of policies, but really, any material exclusions, don't really wait until a loss occurs. Know what's covered and what's not covered now. There's a lot of stuff, especially in that general liability policy in terms of what can be, covered and what can't be. Um, understand, if the exposures, whether it's based off of payroll, based off of revenue, number of patient visits, so that you're not going to have a huge audit.
On that,
If
on
you
that, on that policy material, on the policy exclusions, what are some of the common ones that you've seen within, let's say, home services, for example?
Yeah, so it could be residential exclusion.
What do you mean?
Maybe it's for you can't any work performed at a kind of residential building or complex will be excluded
Got it. So be specifically strictly for commercial
for
building.
for for, for commercial, correct?
Got it. Okay.
It could be a territory restriction. It could be a height restriction. That could be in there. Understand kind of the pollution exclusion as well. Some policies will do a combined general liability and pollution, um, especially if it's material to your business. Um, those are some of the big ones, but those are if things to kind of watch out for.
Okay.
Um, Yeah, review your customer contracts, make sure you're kind of compliance, always kind of look at your loss history, frankly, for that matter, whether you're acquiring a company, or you're currently operating. Um, uh, those you wanna close claims as quickly as possible, and have them. You don't want to have them opened. You don't want to have them, closed so you can kind of settle the amount up and kind of put it behind. When it's opened, the underwriters are going to use that probably against you. Setting up higher reserves than need be, and then so if you come up and renew your policies, you've open claims, they're probably setting a higher reserve than what they're actually going to settle for. But they're probably going to charge you because they're like, oh, wait a second, we're expected to pay out $100,000, this year for it. So we're going to kind of build that into the renewal premium. Um, so always, have your insurance broker, ask for loss runs, making sure there's somebody kind of monitoring those claims, to close them out. And then lastly, I think I mentioned this earlier, but building those that are acquiring a business, understanding the building coverage and who's going to be responsible for it post close. Because I feel like at least 75% of the time within kind of SMB land, the seller owns the building. Um, and then I don't think that this works anymore, but I have a bunch of different, kind of documents that Jay, I can send it across to you. If they want to kind of take a read through of these or and stuff. So yeah, thank you.
Any questions, guys? Insurance, due diligence.
Yeah, feel free to if you want to just reach out to me.
Corey, you just went through this. Did anything affecting insurance come up for you?
No, I've been pretty fortunate on that side. I haven't really had anything, outside of a couple of minor workers' comp claims. But I think the one takeaway, like the cyber, I know that we don't have any cyber type of insurance. So something we want to look into. We do have our own server and, obviously operate on a cloud-based network. So,
And
yeah,
and you
for you would be probably the invoice manipulation, kind of coverage or social engineering,
yeah,
just having good controls, around there. And again, I bet it's 1,000. I don't know how big your business is, but my guess is it's $1,000 a year,
yeah.
uh, for the coverage.
and your rate stayed the same from the past owner. Nothing changed for you.
Yeah, it was pretty close. Yeah. I got, obviously the loss run from the old owner. We pretty much got the same modification rate, and our premiums were pretty much almost identical to what we went with. A completely different carrier, one that I have a long history with. But yeah, insurance in this space is, well, Joshua talked about it, it's pretty damn expensive.
Yeah.
Yeah. I'd say that most of the time, premiums kind of will stay somewhat the same. It's there's not tons of credit that's really built up on the commercial side, as it is on kind of personal insurance. I've found so. But I think a lot of times is that it's in the SMB kind of world is that there's typically opportunities to improve upon it, whether from a coverage perspective or even pricing, because they may not have been kind of really diligent in their handling of insurance in the first place, or
Yeah,
haven't really looked at it in a while. Is typically what I see a lot.
the thing I think I'm going through right now is I think I have 8 fewer guys. I've got 6 fewer trucks on the road. Those are the things that like I've gone back and said, hey, like I need an adjustment because I mean my insurance, for the 3 categories in my umbrella, it's almost $11,000 a month. I mean it's pretty expensive. So if I can drop that a couple of grand just with the losses that I've had in personnel and vehicles on the road, it's well worthwhile.
Yeah, they can endorse the policy midterm, and so your workers' comp, you could just say I adjust the payroll, remove that payroll from it,
Yeah.
and then also you can endorse the policy and it should get then reset on that front. So.
How about you, Glenn? And any insurance stories?
Yeah, I learned a hard lesson in the pest control world. It's really there's sorry, I have a dog in the background. It's my daughter's dog. Um, Pest control insurance is very limited, very few carriers, right? But I couldn't find anyone in California. Found this in Texas. They're expensive. First year, we just went with the cheapest stuff, and I didn't know we didn't have the right type of policy because within our policy period, a customer complained about an issue, and we didn't inform the insurance about it. We're like, oh, okay, we'll see what happens. 5 months later, they come back to us and they get this bid for $98,000 of stuff that we missed. And I called the insurance because I didn't want to fight this. And then so it's like, oh, you guys knew about this, but you never told us. It occurred within your policy period. So I had to write a check for it, not for $98,000, but
Yep.
it's about $12,000 check.
Okay.
That's one thing. And yeah, that insurance though, I mean, just that one claim went from like, $16,000 to $38,000 increase in premium. And we have had workers' comp, the Monday claims and stuff like that
Yeah.
we have to deal with. It's just regular stuff. But the cyber though, we don't have it either. And we have like, reoccurring revenue, credit cards on file and all that stuff. So risky.
Yeah.
And we have a huge database of customers and all this other stuff with like property owners' names and all these things. So that came up in another group chat. So I actually just texted my insurance agent to add that.
Yeah.
And
It's
EPLI.
definitely smart. Yeah.
And
Where are you based?
California, baby.
Nice.
Everybody's out there to sue you.
Yeah. I'm up just north of San Francisco.
Oh, okay, cool.
Yeah.
Nice.
Yeah.
But no, this is super good, man. I never thought about like looking into insurance stuff when you're purchasing a company because all that liability, you're taking ownership of it, And I was surprised to find out that even if it's an asset purchase, it comes along with it.
Yeah, it can. It depends because the historical experience would, but yeah, you can still assume some of that historical liability. So especially with products.
So any specific risks that you see with like certain industries, whether it is like landscaping or fire extinguishing services, or what are some of the things that you see that are specific to certain industries, or HVAC or pest control?
I think the big risk that most people don't think about is just really just having the number of vehicles on the road. That's where I see most of the large claims have always been auto accidents. For any of the trade businesses. And I think the other issue is that, companies aren't really running the MVRs and understanding who they're hiring, and putting in the vehicles. Other
So double click on that one. So you're saying essentially a lot of the risk is in the employees driving trucks being out on the road. So how do you alleviate that risk, reduce, transfer, those 4 things that you were talking about? Or some of the things that
Yeah, I think that there's, insurance companies that will provide you with the telematics, at no cost.
telematics is the tracker for speed and for
The tracker for speed, kind of heavy braking and so forth.
okay.
And honestly, depending on the results of it, you'll get a discount on your, on your premium. I think that's where the industry is going to be headed, over the next, kind of few years. Running
A lot of the systems like Service Titan, that what Corey was talking about earlier, have these add-ons where you can track where the trucks are, what they're, and also the telematics and
Yep.
the driver's doing. Does that work as well, or is it like this is a specific system that you have to be using in order for the insurance to?
Sometimes it depends on the market. Sometimes that could qualify as you kind of having the telematics,
Okay.
in place.
And then you share with them that history over 6 months, a
Yeah,
month,
so
a
the last
year?
for exactly.
Okay.
The underwriter will request it.
Got it. So having that in place and then making essentially safety as part of your culture, making so what are the things have you seen that people have done to
I've also seen, within the trades, for no injuries, that given the project manager a bonus, a couple $100 bonus for having no claims, or for the employees for not having, kind of claims, a few $100 for, some of these guys is a lot of material and enough not to, to kind of take it serious. Even little things like that go a long way, I've seen.
Got it. That makes sense.
Careful. So not to jump in there, but
No, go ahead.
yeah, to not give, like, you can give bonuses. So Josh, I have master's in occupational safety and health, and I was a safety executive before this. So just to
Nice.
clarify on that, like giving bonuses directly tied to safety, individual safety, you have to be careful. In small businesses, you might be able to get away with it, but it is like a no-no from OSHA's perspective. So if you're going to give bonuses for safety, make it like a matrix type thing, or make it to a team rather than to an individual, because they look at that as like a retaliatory step if it's directly correlated to an individual. So you can get yourself in trouble there. So just
okay,
that's good to know. That's good to know. Yeah. Might have to talk with you offline. I like that. So kind of.
Yeah, Corey's gonna have to
you
do
can't get away.
a safety class next time.
California has so many restrictions on that type of stuff, especially in California. Like
California's way better.
Yeah.
Terrible.
No favoritism.
So how did this group come about, Jay? I know you kind of, we got connected, but how long have you been this group been going on, and how did it get all formed?
So this particular group has been going on for about a year.
Yes.
We're about 60 people, and usually we get attendance 10 to 12 people at a time. And this is part of GoBundance, which is a larger mastermind. It's a national group, about 1,000 to 1,200 people. And and so all entrepreneurs and investors, and focus on everything from health, wealth, and relationships, not just business.
Awesome.
Yeah. All right, guys. Any questions? Any additional questions on insurance? Chris, you got any?
Hold on a second. I'm coming.
By the way, so Josh, you saw my stuff. So I sent Josh. We were doing an acquisition on an irrigation business. So I sent Josh my stuff because he helps companies free of charge to do due diligence on their insurance policies and can help you with your coverage and try to do whatever he was talking about earlier. So what have you seen in those things, if you remember anything, on the policies that I sent you?
Honestly, I think we're talking tomorrow, and I'll have it.
Oh yeah, okay. All right. I'll tell you guys what he tells me tomorrow.
Yeah, I'll let you know. Honestly, I took a quick glance. It looks like your company has what you need. But we'll talk tomorrow, and you can even share it with the group.
Okay, cool. Chris, you had a question?
No, I didn't have any questions. Nope, it's all pretty
It
straightforward.
was funny. It was funny actually because the day when I saw Josh's Josh and his partner's presentation, and you mentioned the X mod, I immediately texted Chris and I said, "Hey, what's your X mod?" And and then he says, "Like, I have no idea." And then he came back and he says, "Oh, it's like 0.7 or what was it,
Nice.
0.8?"
I don't remember. It was 0.7 or even 0.6, something like that.
Yeah. So I'm like, all right, that's good. Anything
Nice.
below 1 is good.
Nice.
So yeah.
Yeah, that was a new one for me. I never even heard about that before. I let my insurance guy handle everything. It was, I guess we're in good shape as of right now.
Yeah.
So how do we get the XMod rating? Do you ask your insurance broker for it?
Do you have a copy of your do you have a copy of your workers' comp policy?
Yeah, I should.
Okay.
I mean, I have a portal I log into. Yeah.
You should, within the either the declarations or kind of rating page, it will show you exactly how the premium is determined. One of those lines will be the experience modification rating factor for the current policy year. And then typically the new rating comes out, call it 30 days before renewal. But we have software that you can kind of plug in and try to see what that would be kind of, at renewal or anytime. So it's helpful when somebody's under diligence and there's a large claim. What will that be like when it's actually kind of run through and adjusted?
Got it. And this is only for work comp?
That's workers' comp, correct?
Okay.
And
That's really good.
And then the only way to know that there's a claim coming is if the seller tells you, or there are ways to know about claims outside of.
Yeah, so you can just ask the insurance company or insurance broker for currently valued loss runs for 5 years, and it will show all open claims, the status of the claims, and so forth.
So you got to ask the current broker. Okay.
Correct. Yep. And they can typically pull them within, call it 24 hours.
Got it. Okay. Cool. If you guys don't have any questions, thank you, Josh. I appreciate it. Thank you for the time. I'll post your information. That way, if anyone would like to connect with you on this.
Cool. Awesome. And I'll shoot over those materials if people want to take a read through.
Yeah.
But appreciate it. Great
Thank
to meet
you.
everyone, and enjoy. Have a happy
Thank you,
Fourth.
Josh.
Yeah,
Yeah,
thank you,
happy
guys.
Fourth.
Yep. Bye-bye.
Thank you. Bye.